Another thing we hear about a lot is hedge funds. And we know
Yes.
that's not a garden hedge that you trim.
Right.
What the heck is a hedge fund?
A hedge fund is, when you asked me initially who might have seen a crash coming, typically a hedge fund will see it coming because they're designed to be both, to try to be protective in the eventuality that there could be something going wrong in the stock market. So a hedge fund will actually, there's many flavors of hedge funds.
Mm-hmm.
The traditional hedge fund would be long stocks, similar to a mutual fund that buys stocks, owns stocks
Mm-hmm.
for the long term. But at the same time, a hedge fund and the hedge fund manager, the people within it, are going to say to themselves, the stock market is not always up and to the right. So they're going to build a book of stocks, if they're a long short equity fund, that is going to short stocks, which we can talk about for a second.
We have to talk about that, yes.
But you know, the basic idea being that stock markets are volatile, so therefore, why should you only own stocks all of the time when perhaps, as we're going through 2008, 2007, or 2000, they can go down. If they go down, you want to hopefully profit from the decline in the stock values that you have short. That mitigates the losses you're having on the long side. So the idea is to hedge, to have both sides of something. Now hedge funds can be long short equities, they can be arbitrage, they can be trying to profit from the...
But are they audacious, more audacious? We think of them as mysterious. They're generally private.
No.
They're hard to penetrate and to know about them. You can't just dial up the balance sheet like a public company. We think of them as mysterious and risky. Is that true or false?
You know, I think that definitely that's the typical idea of a hedge fund, but they're no more murky than the whole investment industry, probably. I'm a little biased. We run a hedge fund at Formula Growth. There's more transparency than you might think. I would suggest to anybody who invests in a hedge fund, if they don't get the transparency, then they should not be in there. Bernard Madoff would be a brilliant example.
He ran an opaque.
So you can't really tell what he's doing. You need to know what any manager is doing. I would say that a hedge fund typically has very talented people in it, because talented people gravitate to where the best challenge is. And if you're trying to manage money in order not to lose money as well as make money in the stock market, mm-hmm. you're going to get the best people within the hedge fund area, just like you're going to get the best football players playing in the NFL, because it is the top league.
Okay.
So
do their returns show that over the years?
They have traditionally, because they avoid much of the downside, not always, and these days lots of hedge funds are going out of business, but because they avoid some of the downside, let's say, their returns over the long haul will be better.
And you mentioned short selling, and you were right to say, let's talk about that, because it seems simple, but boy, oh boy, it's a mind bender when you get into the concept. What is short selling, first of all?
Short selling has been blamed on the demise of America, quite frankly, these days. But short selling is not murky. It's essentially when one buys a stock, you're going long the stock. You're taking a chance. You think the stock is... You're buying a stock at $10 and you hope it goes to $20 or to $12, and you think you're going to make any kind of return from that point on. Short selling is exactly the opposite. You're selling a stock in the hopes or in the analysis that you think the stock is going to go down. So,
but you're selling something you don't own.
You're selling something you don't own.
You know you'll have to buy it later to reimburse.
And you hope you're going to buy it later at a lower price.
Yeah.
Just like if you go long, you hope you're going to sell it at a higher price later on. You're doing exactly the same.
Now somebody might ask, if a lot of people are long on a stock,
yes,
why are some other people believing the exact opposite? Who's right?
That's what makes a market. On any given day, there are about equal amounts of buyers and sellers. That's what makes a market. A market is everybody has a different opinion about Apple or RIM or IBM.
So there's a bet going on.
There's a bet. There's
whoever loaned the stock to the short seller to sell,
that's it,
is snickering, thinking I'm the right
guy.
It'll go up.
That's
the
right.
short seller is saying, what an idiot.
I know something, or my analysis tells me that either the management is not appropriate, the business is going to be competed away. It could be any amount of reasons why a company will run into trouble.